Up next, we have How Will Tokenized Governance Affect the Future of Community Banking with our speaker who's going to give a presentation, Mr. Oliver Studd of Valhalla Network.
Thank you, everyone. Good afternoon. Oliver Studd, founder of Valhalla Network. And before we deep dive into how we can localize a banking system and offer ethical banking solutions, it's really important to first understand the true role banks play in the wider society. So today, there's a serious misunderstanding. People still believe that banks are just financial intermediaries, moving money from one person's account to another, from the lender to the borrower. This is understandable. It is what is taught in mainstream economics, in leading colleges around the world. I'm a former HSBC banker. Sounds like a call for help, doesn't it? When I joined HSBC, even I was being taught that banks are financial intermediaries. And you can imagine how that lecture went down. So what actually are banks? Well, they're much more like wizards. They create money out of thin air every time a bank issues a loan. They do not move money from one person's account to another. They simply create it. And I'm sure we'd all love to have one of those ones. So this unique ability to create credit impacts your everyday life and which industries do well versus which go bust. So if banks are the lifeblood and have become the lifeblood of this society, SMEs are the backbone. Gone forward a bit too much. SMEs are the backbone. SMEs employ roughly 2/3 of the working force on average, and they account for over 95% of businesses. In the UAE alone, they employ 86% of the private sector. Despite their importance, because of their small size, they're limited and they rely heavily on bank financing for external funding. Unfortunately, banking systems around the world are concentrating and consolidating. Big banks are buying up the small banks. You know, they're nice opportunities, a profitable bank. We're bigger than you, let's buy you up. Unfortunately, empirical evidence shows that as banks grow in size, their propensity to lend to small businesses declines. They're much more focused on lending large amounts to large businesses than dealing with the small firms. Now, this is understandable. If you're a bank CEO sitting in your tower in Canary Wharf, you're very aware of how much demanding the shareholders are regarding the growth. They want that growth. And it's much easier to lend 100 million out to one large business than lend thousands of small loans out. This means that as these bank systems are consolidating and there's more of these big banks out there, and they're not lending to SMEs, we are seeing recurring boom-bust cycles. Now, this ultimately leads to increased inequality, increased bankruptcies, and increased unemployment. This red line is showing the sort of perfect scenario that we're trying to get to and what localized banking can achieve. So why are the banks having to have a boom-bust cycles? How do they create these boom-bust cycles? Why are they so important? Well, as I mentioned, they create money. No other firm can create money, only banks. Not shadow banks, not, oh, we partially have a banking license and we can do payments and all that. No. Only banks, full banking licenses, institutions, can create money. Now, credit can be divided into two streams. Bank credit that's being created for the real economy, that is transactions that is determining GDP growth. And then you've got bank credit that's used for the financial economy, the financial transactions, non-GDP related transactions. Now, I love to start in reverse order, so let's go and look at case 3, financial credit creation. So this is when a business wants to borrow from the bank to, let's say, invest in the housing market. Now imagine that bank is pumping up the housing market by lending all that credit out for this market to grow. All you're getting is asset price inflation. You're not getting GDP growth, and it is unsustainable, because as soon as banks say, let's stop lending, unfortunately, all that value which is in the market collapses. It's not actually there. And this was seen in Japan in the 80s and 90s. The banks were creating all this credit for the asset markets, and when the banks stopped lending, suddenly the markets collapsed, and you had the bust. That is unproductive. What is case two? Consumption credit. That is when banks are lending for people to consume more, or businesses to consume more. And we saw this in 2020 to 2022. Banks were increasingly lending for people to just buy more things. It wasn't resulting in an increased number of goods or better services. It was just pushing up the prices. Consumer price inflation. Again, unproductive credit creation. Yes, you get nominal GDP growth, fantastic. But when you look under the covers, it's all inflation. That's no good. We don't want that. So what's case one? Well, case one, investment credit. This is productive credit creation. Banks are lending to businesses so that they can invest in either creating more goods or offering better services to their clients. We get nominal GDP growth without any inflation. This is the sweet spot. This is what we want to strive to get to. Well, this is all well and good, but what's the actual solution? Well, we need to focus more on these small and medium-sized businesses that are very productive with the funds that they get from the banks. They use that to invest, that nominal GDP growth without inflation. But to do that, we need these banks to create the credit. We need to localize the banking system by setting up thousands of small banks. In Germany, there are 1,500 community banks that lend exclusively to small businesses in their local area. They offer traditional face-to-face banking solutions in a customer-centric and sustainable manner. This has resulted in Germany becoming a leading market net exporter and also having a robust regional network. In the 2008 crisis, not one community bank in Germany required a bailout. Fantastic. Also, from my understanding of Sharia-compliant solutions, we're trying to do this in an ethical way as well. We're building on this in an ethical way. And to put that into practice, each of the community banks that we set up, and can be set up, can be partially owned by a foundation that sets up with the bank, a charity foundation. And the purpose of this is to reinvest a portion of the dividends back into local community initiative, sport development programs, something that the local community actually needs. This means that these community banks are actually acting as community support hubs. They are offering governments a release valve. Communities no longer just have to rely on the central government for finances or anything like that. For example, as the population ages, you don't have to rely so heavily on that central government. So it's fantastic. And also, we can democratize finance by allowing the people to get involved. They can combine investor capabilities and know-how and decide on how the network grows in a DAO-like manner. If the right conditions exist, communities everywhere can thrive. Together, communities can create these conditions. Thank you very much, and if you have any questions, I'd be happy to answer them.
East region.
Yes. So if we were to try and implement model here, from my understanding of the banking system here, it's not so much concentrated. There are many large banks, but they are large, and they're not focusing purely on small businesses. They're not looking at offering these ethical solutions to small businesses and really work closely with them. So what we would do is work with the government, speak to the government, and we'd be very happy to, and look at their ideas and how we can work with them to implement the solution. Thank you. Throw it across.
Hi, thank you. My question is, how is it connected to the blockchain? How are you going to implement with the blockchain?
Yes, so the network itself are traditional banks with fully banking license, each their own single entity, but they can all be owned by a charity foundation at the top that is then governed by token holders on-chain. So the token holders can get involved and decide how the network grows, where the banks are set up, how many banks are set up each year, capital raises that are done, and how the funds are used can all be done on-chain. Thank you. Any other questions? No? Brilliant. Well, thank you very much, everyone.